Hey everyone, welcome back to FX Limit, your go-to channel for all things Forex trading. Today, we're diving into a topic that's crucial for every Forex trader out there, whether you're a seasoned pro or just getting started. We're talking about leverage, specifically the top 5 most common leverage mistakes that traders make. These mistakes can really put a dent in your trading account, so it's vital to understand what they are and how to avoid them. Leverage in Forex trading is a double-edged sword. It can amplify your profits, but it can just as easily magnify your losses. Understanding how to use leverage effectively is key to maintaining a healthy trading account. So, let's jump right into it and discuss the mistakes you need to steer clear of. Mistake number 1. Overleveraging. This is by far the most common mistake traders make. It's tempting to use high leverage because it can dramatically increase your potential profits. But here's the catch: when the market moves against you, even by a small amount, those losses are equally magnified. Overleveraging can lead to a margin call, wiping out your account in minutes. The golden rule here is to never risk more than you can afford to lose. Use leverage wisely, and consider starting with a lower leverage ratio until you gain more experience. Now, while we're on the topic of managing risk, let's talk about a tool that can help you navigate the markets with greater confidence: the FX Limit Apex Trend Indicator. This indicator is designed to scan the market for trends, giving you clear buy and sell signals across multiple currency pairs and timeframes. By using it, you can better assess when to enter or exit a trade, which is especially useful when you're dealing with leverage. Remember, the key to successful trading is not just about making profits but also about minimizing losses. The Apex Trend Indicator can be a game changer in that regard. Moving on to mistake number 2. Ignoring the impact of leverage on margin. When you open a leveraged position, your broker requires you to maintain a certain level of margin in your account. Traders often overlook how quickly their margin can be depleted when the market goes against them. This is where you need to be extra careful. Always keep an eye on your margin level and ensure you have enough free margin to sustain your positions. If your margin level drops too low, your broker might automatically close your positions to protect you from incurring further losses, which is something you definitely want to avoid. The third mistake is not adjusting your position size according to your leverage. When you use high leverage, you need to adjust your position size accordingly. Many traders make the mistake of keeping their position size the same regardless of the leverage they're using. This can lead to taking on too much risk without even realizing it. A good rule of thumb is to reduce your position size as you increase your leverage. This way, you maintain a consistent risk level, regardless of the leverage you're applying. Mistake number 4. Overtrading with high leverage. Overtrading is already a dangerous habit, but when you combine it with high leverage, it can be disastrous. When you're trading frequently with high leverage, you're exposing yourself to a lot of risk, and the chances of making impulsive, emotionally driven decisions increase. The market doesn't always present good opportunities, so be patient. Trade only when your strategy signals a high probability setup. This is another area where the Apex Trend Indicator can assist you by filtering out low-quality trade signals and helping you focus on the trades with the highest potential. And finally, mistake number 5. Failing to use stop-loss orders. Trading without a stop-loss is like driving a car without brakes. If the market moves against you and you don't have a stop-loss in place, your losses can quickly spiral out of control. This is especially dangerous when using leverage because your losses will multiply. Always use a stop-loss order to protect your capital. It's one of the simplest yet most effective risk management tools available. Now, I want to emphasize something important. Leverage, when used correctly, can be an incredibly powerful tool. It allows you to take advantage of market opportunities that you might otherwise miss. However, it's crucial to approach it with respect and caution. Make sure you're fully aware of how leverage works and how it impacts your trading account. Use tools like the FX Limit Apex Trend Indicator to enhance your trading decisions, and always prioritize risk management. So, to recap, the top 5 leverage mistakes to avoid are: overleveraging, ignoring the impact of leverage on margin, not adjusting your position size, overtrading with high leverage, and failing to use stop-loss orders. By steering clear of these pitfalls, you'll be in a much better position to succeed in the Forex market. That's all for today's video. If you found this information helpful, don't forget to give us a thumbs up and subscribe to FX Limit for more Forex trading tips and strategies. And if you're interested in learning more about the Apex Trend Indicator, check out the link in the description below. Thanks for watching, and happy trading.